Hey guys, Benji D here from 𝐏𝐫𝐸. I do understand the stock market is going a little bit crazy right now, but now I could almost guarantee you that 90% of you guys are selling off your little cousins or putting your putting your college funds into stuff like GME, which is Gamestop pretty much, AMC, Bed Bath & Beyond's, BlackBerry, Nokia. Now before you do that, I'm going to tell you to be extremely careful. A lot of you guys are jumping off the hype. You're learning things from Reddit or the news. And you're learning that a lot of people is making a lot of money from these companies. Now, one of the things I learned when it comes to investments is that you don't want to follow a trend that's already at the top. You want to catch the trend before it happens, invest, so that way you ride it to the top. The people who buys at the top ends up doing this. You lose. So what I'm basically trying to say is that you don't want to invest your money based off hype, based off trending things. You want to catch it before it becomes a trend and put your money there. A lot of companies that I invest into, I do catch it before the trend because I study it, figure out what the company's about. And because I know it's a future company, I just put the money behind it, let it sit there for about a week or so. A lot of times I invest into companies, it only takes about 1 to 2 days, and then I see it peak up. And I collect profit and leave the initial investment. Now there are times I do see myself at about $200 to $300 profit and I do not pull the profit out. And this is where I mess up. This is where I get greedy. You have to understand the psychology of the market. If anything you're invested into peaks up like 200%, I guarantee you the next follow up is for it to go down. That's always gonna happen. Why? Because people's collecting profit from the market. Every time it peaks up, it will go down. The way you protect yourself from losing it all when it comes back down is you collect profit. Let's just say you put $50 into a stock, it shoots up, you make $200 from that stock, $200 profit by the way, so plus 200. What I usually do is I sell off the 200, so collect the 200 and leave the initial $50 that made the $200 profit. I never want to pull out everything from the market because what happens then is I continue to watch the stock price go up and I realize I missed out on an opportunity simply because I sold off too early. Now let's just say you keep the initial investment of the $50 inside of the stock, right? Let's say that stock plummets, it wouldn't matter. Why? Because you gained a total of $200 profit from that $50 initial investment that you put in. So you never actually lost anything. You gained more than you lost. Now that's pretty much how you protect yourself from losing. You do risk management by collecting profit, especially if it's way more than the initial investment, and then you leave the initial investment just in case something's gonna happen. There you have it guys. If you have any questions, be sure to let me know what it is down in the comments below. I'm not a financial advisor. Anyways guys, Benji D here from 𝐏𝐫𝐸 and I am out. Peace.